Prep. I'm Spencer. We've got Joel. We've got Dennis. We've got Mitch in the background. We've got you here in the chat. Good morning, everyone. I see you all in the chat. Good morning, Jeff, Dino, XX Cat, Hertzgram. There are other names that I can't pronounce right now. Bill, I see you. What's up, guys? You know what we're going to talk about. Meta, Facebook, story of the after-hour session, story of the morning here, probably the story of the day, frankly. There was not much positive spin there. We'll talk about that and the effect that's having on the market. We got other earnings to discuss as well. Spotify, Penn, Qualcomm, to name a few. Marc Chaikin will be on at 8:15. Peter Tuchman on at 9. You guys know the drill. Hit that like button. Let's go ahead and run that intro.
Coming to you live from downtown Detroit, this is Benzinga's Premarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
A little snow couldn't scare me, guys. I'm back at the office. You're where you normally are, both at home, which must be nice. So, good morning, guys. How are we doing?
Was I shorting that snowstorm?
Yeah,
And what was that
You're
Monday?
definitely short the snow. All shorts are working right now, including snowstorm shorts.
Do you want to hear a good story? And I can't remember the name of the guy. It was more than one guy, but back in Chicago, when I was in the S&P 500 futures pit, there was a guy that made a market in snow futures. And basically, the market was how much snowfall the city of Chicago would get for the winter. And it would be, it'd be nice, and it would be a real market. And then there'd be we didn't have quite the weather predictions that we have now, but there'd be a call for a big storm. The market would run up. There'd be all kinds of volume in it. And then, the storm wouldn't be as big. So that was fun. They're called snow futures. Can you believe that? People actually wagered on how much snow the city of Chicago.
Right.
Why does that not exist today? I'm sure that exists.
Was this like off the book, Joel? Was this like off books? This is like.
Oh, well, he had a book in his hand. I could see the guy. He was short. He had a mustache.
I'm sure this still exists.
Well, there's nobody on the floor to do it. But you know what also they used to have? They used to have a 13-run pool, which was fun for baseball.
Yeah.
If anybody's on the floor, anybody remembers this, you know what a 13-run pool is, right?
Yeah, we've talked about this before.
Oh, sorry, Spencer.
No, it's okay. That's okay.
All right, tangent. S&P's down 47. Ooh, something happened here. A little whoosh down.
The ECB just dropped their statement. That came a few minutes ago.
Okay.
Could have been that.
Well, the break that Dennis was looking for, it finally came. It came in a heartbeat, in an absolute heartbeat. The close is irrelevant today. 77.25 is mirage. I would feel very safe saying we're not going to see the close today. We're hanging out near yesterday's low, which is 45.35. Pre-market low 45.20. If you're looking for me for support in the market, you're going to have to go somewhere else because the way we went up, that's just the way we could possibly go down. Crude's in the red by $1.03 at 87.23. Gold down 8.20 at 02.30. Silver going the same way, down 38 cents, 22.33. Bitcoin's getting really interesting here now that it can't clear 40. It's down 9.15 at 36.620. And Ethereum futures, they're down 4.29%, $117 at 26.09. Triple D, I would have loved to been a fly on the wall when those Facebook earnings came out, because the first thing you did was probably cancel all your bids and try and hit bids in every related stock. Did you get picked off on anything?
Dennis, you're on mute, Dennis. Dennis.
This is the first time Dennis has ever been
Dennis.
Oh, wow. You know why? Because I had to make a trade, so I was on mute. No, I'm not an idiot. I don't have bids sitting out there when Facebook earnings are imminent. It's when these random stuff comes out that I was like, oh. So I didn't have any bids out there to get picked off on. So that's the good news. The bad news is for the market, I mean, this is ugly. This is ugly for Facebook. And I'll just say, like, and I told this story on the pre-market show, and then we'll get into the Facebook earnings, but it's down 22% this morning. And I just, looking back, and nobody, probably knows this unless they were trading, but, if somebody does know it in the chat, I'll just ask right now, does anybody really know which stock really kicked off?
Let's see how good our chat is.
Let's see how good the chat is. Which stock really kickstarted the tech bubble burst back in March of 2000? Does anybody know
My
the
buddy is
answer?
on Easy Mike or Spinner.
I don't know if anybody's going to get this. The only reason I know it is because I was trading actively back then, and I can remember. And the markets were right near all-time highs. NASDAQ was near 5,100, and this stock was going into earnings, and it was right near all-time highs as well. And then it got cut in half in one earnings report. And it was the most widely owned stock. So I'll give you another hint. It was the most widely owned stock in the year 2000. And it's a stock that's not even traded here now. It's a stock that actually went off the board.
I'm going to give a lot of people that are giving stocks that are not even around.
Well, that's a good guess because I just said it's not even around.
Wait. Bill got it.
Bill. Bill.
Yeah, I knew Bill. I didn't say Bill.
It was Lucent Technologies. Lucent Technologies. It was an AT&T spinoff, so that's why it was so widely owned. And it was near all-time highs. And it reported earnings, I believe it was back in like right there around March of 2000. And they cut the stock in half from near all-time highs. It was down 51% in one day. And I was just the jaw hits the floor. I did not think a core, and I didn't own it at the time, but I did not think like a stock that widely owned. The most widely owned stock in the U.S., Lucent Technologies, got cut in half in one day. One earnings report down 51%. And then the death by 1,000 cuts on everything started happening. So when you start seeing core holdings getting hammered, it turns people off of stocks because it's one thing for PayPal to fall 25%. It's quite another for Facebook to fall 25%. We're down 23% right now on Facebook here. So give us the report, and then we're going to break down what it means for the overall market. It's not good news.
Before you give the report, and I know I've told this story before, but we had a trader in the office that was long 100 shares, and it really dinged his account. And I pulled him aside, and I said, "Listen," I said, "I know this is a big loss and everything, but probably the best thing you could do is just eat this loss, right? Because I don't know if the stock's coming back, but at least clear your head for the day, get flat, and then see what happens." He goes, "I'm holding this stock until it goes to zero." And I said, "Well, it may go to zero." And that stock went up, and it went
didn't
down.
Quite go to zero?
No,
it actually got taken over, I believe, by
Alcatel-Lucent,
for $2. It was 120. It got cut in half that day, I think, to 60, or I might have them. It was like $100. Cut in half to maybe 50. And then it cascaded and it just went down every single day. It was death by 1,000 cuts. And I remember, like, I had a core short position in Lucent. I remember I always wanted to be short Lucent after that. And 2001 was a very good year for me. And it was like Lucent would rally like 1-2%, I'd short it. And it would just go right back down and make money. And it was like my biggest stock that year. I must have traded it 1,000 times, just literally shorting every single pop on it, sticking short. And I wasn't huge size back then. I was a young buck. I was 23 or 24 years old. But, I can remember making $1,000 here and $1,000 there, just, pecking away, learning as I go. I was like, wow, this Lucent, it just goes down every single day. So I'm like, it rallies a little bit, I short it. It rallies a little bit, I short it. So I was actually participating in the opposite side of the death by 1,000 cuts. And I mean, everybody kept thinking it's got to come back. Everything has to come back. Everything always comes back. We were in the tech bubble, where stocks only go up. They don't go down. So it's going to come back eventually. And it never came back. It eventually went off the board, I think, at around $2 or $2.50 when Alcatel. Nortel, JC Jacobs, same exact thing. You're correct. Nortel, which was the most widely owned stock in Canada, became so big, it became 29% of the index. $120 a share. 29%? It did go to zero. It was 29% of the Toronto Stock Exchange. Google it.
God,
29%. It became so big and so dominant because everybody had to own Nortel. It was the future of everything. Telecommunications, being able to communicate without a rotary phone, was the future of everything. And you know what? They were right, but it didn't matter. Its valuation was nuts. It went, trading 100 times earnings, all the fun stuff. it actually went off the board worthless. So again, this is where I learned about value investing, because I had a few long-term investing portfolios that were invested in tech stocks and they got hammered. I was trading, making money trading. I remember saying, I'm losing more money in my investment account than I am trading. But anyways, let's go back to the Facebook report.
Yeah.
Give us
Sure.
the numbers, Spencer. Give us the analysis from the
Yeah.
call,
I
and
mean,
then let's break it down for the
the
market.
crazy thing is the bar wasn't even that high, and they didn't even come close. So, okay, the earnings per share for Facebook, $3.67 versus a $3.84 estimate. So they missed the bottom line earnings per share number. The revenue came in a little bit higher. Whatever. Going forward, okay, as far as revenue guidance, they guided revenue for the current quarter would be between $27 to $29 billion. Estimate was somewhere in the $30 billion range, so a little bit light on that number as well. The big thing was the user growth, okay? Daily active users, monthly active users did not grow quarter over quarter. Now, they didn't decline, but they didn't grow. And for Facebook, for their core business to not be growing, it sort of boggles the mind. This is like this. I don't think this has ever happened before, where there are two key metrics: DAUs and MAUs did not grow from the prior quarter. Sort of again, we're talking about Facebook here, right? And it's not just Facebook;
Right.
it's Facebook, it's Instagram, and it's WhatsApp, and it's Messenger. On the conference call, I got to tell you, I've listened to a decent amount of conference calls in my day, and I struggled to find one that was as bad as that one. That was a pretty brutal one. Even the Robinhood call didn't seem like it was that bad compared to yesterday. Bottom line is competition. They were very clear on the call. They were very clear. They mentioned a variation of the word competition 13 times, mainly looking at you, TikTok. But that's what it comes down to. They saw this coming. They're not stupid over there. There's
Yeah.
a reason they announced the name change and the rebrand and the entry into the metaverse when they did,
Yeah.
because the core business obviously
They
is
saw it.
slowing down,
Core
and so
business it's under attack.
yeah, it's
It's
under.
under
So they
attack.
talked
I
about
can look no further than my own home. My
yeah,
wife used to spend a lot of times on Facebook. What's going on Facebook? She only seems to go to TikTok now. She doesn't even look at Facebook. And I mean, Instagram, she's got them all. Obviously, social media stuff. But I mean, she's on the TikTok a hell of a lot more than any of the other ones.
yeah.
Their core businesses are under attack. And you're exactly right, Spencer. The writing was on the wall. And maybe we should have all saw it, that this was eventually going to have a bad report when they're rebranding their name and trying to get into and get into other core businesses. So scrambling around. So valuation was fairly cheap coming in. I think it was trading 22 times. It's going to be a lot cheaper after
Wow,
today.
yeah.
Is it a value stock? It is, but if the core businesses are in decline or not growing anymore, and the growth rate was not good. What did they say for the growth rate, Spencer? 8% or something?
Yeah, and that's year over
Yeah.
year, and that's year over year. But now, frankly, quarter over quarter is probably the more interesting thing, because again, they didn't grow quarter over quarter. That never happens. It's
They didn't
Facebook.
grow. No growth.
Show the pro, Spencer. Show the pro in the earnings. I'm just going to give a level, and this is going to be the level for the year.
Okay,
You ready?
Yeah.
I'm ready.
245.
245. Do you think it's going to be the yearly low, 245?
Well, no. That's going to be the number of the year. Like if this thing doesn't hold 245,
Oh, I see what you're looking at. The
yeah,
2020 low. So
yeah.
Joel's extracting this from the September 25th, week of September 25th. It got down to 244 and the 244 again. It might challenge that today. Did it challenge it after hours? Interesting if it bounced
No,
right there.
no. Someone's
Hasn't been
trying to.
quite down there yet.
Yeah, there's a 250, 252 buyer for now. Right now, for now, the
Yeah.
bounce has been 260. So if you're trying to pick a bounce, but you want to see what this chart looked like yesterday before the
Yeah.
regular session.
Yeah,
PayPal, look at that. This right here,
Yeah.
going all the way upper left chart. Okay, this was PayPal in the after hours. They're like, oh, well, I'm going to
In
try and buy
pre-market.
that open. Yeah, pre-market right here.
Yeah.
The pre-market low was the high of the day.
Yeah. That's
Yeah, I
incredible.
don't know. Facebook is
Buy the
already
dip,
gone.
just massacred on
You got
PayPal all
massacred.
the way down.
4 cents. It opened, I think, what I can't even know what the handles are. 139.89. It went to like
Yeah.
139.32.
Yeah.
I mean, if you tried to buy that thing off the open and you didn't get out immediately, then you are not listening to Benzinga's Pre-Market Prep
This
show.
is
I
why
mean,
we're going to bring
that's it.
Marc on in a second, but this is why I have been saying don't chase in this market. We're not in Kansas anymore. You'll get another chance. I mean, and everybody, including Kramer, featuring the Kathy Woodstocks, ARKK, right at the top, right literally at the top of this recent move. He featured it, stock ARKK 77.38, and he was saying, you know, the time might be now to start buying these stocks. It couldn't have had worse timing. ARKK is down in 2 days, 10% from where Kramer just featured it. And now you look and you're thinking, okay, now what? This is the pullbacks that inevitably keep happening in all these growth names. I have egg on my face here. I took a flyer in Square. Obviously, it went up 20% for me in 3 days. What do you do when your stock rallies 20% in 3 days in this market? You sell it. Didn't sell it, actually added to it. Horrible move. And now I'm actually down in the position 2 days later. That's unbelievable. And Square is back to where I originally bought it, just like that. So, I mean, you got to take the profits in this market while you got them, and the market takes them from you. Yes, I put Square in the long-term account. Yes, I'm telling myself, stop trading your long-term account. You like Square. You believe in Dorsey. You believe it's long-term. But the trader in me says sell every time you get a 20% profit in 3 days. Because you know what? It
I want to
goes
show
away.
you. I'm going to bring Marc on right now, but I want to show you. I thought there was a mistake yesterday in the Facebook report because I'm going to pull up the Benzinga Pro news feed right now, and all I did is I went to a news feed, I searched for Facebook, and I filtered it just for earnings headlines, which you can do, and I scrolled back to October, their last report. Look, this is for Q3, October 2021. DAUs 1.93 billion, MAUs 2.91. Cool. All right. So now I know what they said last time. What they say yesterday? Again, 1.93, 2.91. Scroll up to yesterday. What they say? Oh, 1.93, 2.91. The same numbers.
Same numbers, but now we're down 22%
I thought
on it.
there was a mistake. Anyway,
Wow.
let's bring on Marc Chaikin to get his thoughts on this. Marc is the founder of Chaikin Analytics. He's the creator of the Chaikin Power Gauge, Chaikin Money Flow, Chaikin Oscillator. He names a lot of things after himself. Marc, good morning, man. How are we doing?
Oh, just fine. What's going on?
We're trying to make sense, heads or tails of all this. I mean, it was Facebook. It seems like the story of the day, but what are you watching right now?
I'm watching the lows from a week ago Monday on the SPY just to make sure they don't break. And if they do break, then this is going to be a more extended decline.
Are
So
you, where are you right now? Like, in your own sentiment towards this market? I mean, it is a tough market. We've sold off substantially. Just to recap what's happened in January, we were at all-time highs. We had one of the worst sell-offs for a January in the history of the markets, and then we rebounded wickedly in the last few days of January so that it didn't look so bad. Where do you stand on the overall market here first?
I'm still bullish,
Okay.
and I'm looking at 3 bear markets that are already in place: SPACs, IPOs, and small caps. So it's not as if we haven't had huge damage. And you factor in the Kathy Wood stocks, and then the what I call the deplorables, the companies with no earnings and high price to sales ratios. Throwback to Hillary Clinton there. We've had a bear market. The question is, what does the S&P do? And is there enough liquidity, and is there enough funds flow from both retail and institutional with bonds weak to prop up the, let's call it the defensive stocks, like the Procter and Gamble's of the world, the energy stocks. So, sometimes putting a label on something is not helpful. That's why I'm looking at the levels, and I'm still bullish, expecting higher highs, but perhaps much later in the year. And again, if we close more than 10% down on the S&P, which is roughly I think the 43, 4330 level, you're going to have a serious double bottom, not what may be brewing here, which is a mini double bottom. So, and very bearish on the stocks you've been talking about. Why couldn't Facebook sell at 10 times earnings if they stopped growing, which would be 145?
That's a great point in itself. And it crossed my mind as well when I was like, yeah, you get those, you can't help it. It's like the psychology of the market. You see something down $70, you're like, should I put some of that in the long-term portfolio? And I asked myself that specific question. I'm like, if they're not growing, why do they command a 20 times multiple? So, the stocks that don't grow, a lot of them in this market are 9, 10, 12 times. So, I mean,
Exactly.
if it stops growing, I think you're right. I think it's, this could be one of those, value traps happening here again. And I mean, PayPal's feeling it right now too, with their growth slowing and the multiple contracting very, very quickly. So, great point you're making. What stocks are you looking at to
Wait,
buy?
hold on,
Because you're
Dennis.
staying bullish.
Before you
Yeah.
go to that, Mark, that low is 300 points away in the S&P. 318 points away.
Well, you just had a 618 rally, and until the futures tanked after the Facebook report, you were banging right up against the 618 retracement level, which was 45.80.
Okay.
So yeah, it's 300 points away. But remember, price action is compressed these days. You've got all these flows from CTAs. They flipped bearish a week ago when we closed below the 10-month moving average. So $80 billion of CTA money went bearish on QQQ and SPY. You've got volatility flows. So things are compressed. This isn't your grandmother's stock market with investment committees and so forth. It's machines moving money around, not just the high frequency traders. People get a little bit confused by the headlines. That's a factor very short term, but big flows, they call them vol strats and CTA flows, have a big, you can be down 300 points in 2 days. That's no longer a big deal.
So
Okay.
RFC asking the same question that I'm going to ask you, and I was going to ask you before, is if you see, Facebook not rebounding and you're bearish of SPACs, like you were saying, you're bearish certain stocks, what are the stocks and sectors that are going to propel us back up if you remain bullish?
Well, it's the defensive sectors right now, which would include stocks like Procter and Gamble. I love Keurig Dr. Pepper. Look at that chart. That's a beautiful chart. PepsiCo. And the energy stocks, until proven otherwise, until we see inflation and the threat of war disrupting natural gas supplies in Europe, you have to be in those two sectors. I like growth long term, as you do, Dennis. And so I'm looking at the stocks I like, but I'm not putting my toe in the water because there are sharks in there.
Oh, they're biting, and they're biting hard. And I got my toe bit on Square just because I stuck it in the long-term portfolio, a half-size position and this was like a week ago, and immediately I got up 20%. So I bought it at 106. It went to $130, and I'm looking at that thinking, wow, that's a pretty good return pretty fast.
Yeah.
Here we are 2 days later, right back down.
Get off that one, Dennis. You made,
You don't like Square?
Well, I don't, but you more than anybody know when you have a losing trade, just put it in the rear view mirror and move on. You don't have to
not
defend,
even a loser because
you
it's
don't
back
have
to
to
where I bought it.
defend yourself to the public. If you
Pardon
don't
me?
feel you don't have to defend yourself to the public. You've had winner after winner after winner, and you don't waste a lot of mental energy defending this. You did it. It didn't work. Move on.
But again, this isn't in my trading portfolio, and just for full disclosure, maybe you don't know this, Mark, I cut my trading portfolio, day trading portfolio, every single day at 10 a.m. I go flat no matter what. Every single day for 10 years straight. At 10 a.m., I'm out of everything. This is a 24-hour portfolio. At 10 a.m., I get out of everything because that's when I go and I run my errands in the middle of the day. I always hate trading 10 to 2 because it's shop hour and there's not as many inefficiencies, and I love the inefficiencies. So I'm always out of everything at 10 a.m. But I stuck Square in the retirement account because I was like, I like the story long run. Where do I think Square is in 5 years? I think it's higher. So the question is, do I cut it if it breaks through 100 in the long-term account? Because then I'm confusing trading with investing. And I struggle with this. So I'm asking you because you've been in the markets for so long. I'm a very good trader, but I struggle with trading my long-term account, and it actually costs me money.
Well, the way I'm solving that problem partially is I use our power gauge rating. So the power gauge rating on, it's called Block, isn't it? No longer Square.
Yeah.
The power gauge rating on Block has been bearish for 4 months, 5 months. I'm looking at stocks that in our rating are what we call neutral plus. They have the 20-factor model has great underlying potential, but they're trading below our long-term trend line, long-term moving average. So I'm looking at the beaten down stocks that have neutral plus ratings like Unity and Trade Desk. I'm not looking at the stocks with bearish ratings like Facebook, PayPal, or Facebook had neutral, but PayPal, Square, there's a pattern. PayPal, Square, same business. It's not as if these are one-off events. People are back out on the streets and they're not using the internet as much. I mean, we still use Amazon because we're here in the woods in Connecticut, and I'll pay with my MasterCard. But I think that, there are definable trends that are shifting, and, Square and PayPal are in the crosshairs on that one. So, but I do look at tech here, the stocks where I think there's a story. The Metaverse is a little overblown, but Unity is a great stock. And again, Trade Desk, which is into digital advertising. But I got to tell you, I'm doing it with long-term leaps, 2-year leaps, and I'm selling out of the money call options every chance I can get to reduce the cost of those leaps. And it's good. I bought the leaps on Unity when the stock was 130. I bought the 135 leaps, dropped to 90. But I've already reduced the cost of the leaps by over 20% by selling short-dated out-of-the-money calls against them. So that's my strategy. Rather than tie up a lot of capital in these names that could go a lot lower, I'm buying the leaps. The time decay is a lot lower, as you know, and so that's what I'm doing personally.
How is Unity different than Square? Like what is its rating? In the Chaikin money flow, what does Unity look like? Because with it getting hit this hard near the lows, I would assume it has. Would assume it has a bearish power rating as well.
No, it's got a neutral plus rating.
Why?
Why? Because the underlying factors, the growth factors, and so forth, are positive, and
the fundamentals.
The fundamentals are positive, and there is revenue growth. There is a hint of an earnings turnaround, meaning from red to black or green. But if there is a metaverse, Unity is going to be at the center of it, in my opinion. And the acquisition of the graphics studio is just a huge plus. Right now, anything that has the hint of Cathie Wood attached to it is toast.
And I agree, and I've said this before, and somebody was reaching out to me last night. I've said, I do believe this is one of the best ways to play the metaverse as well. The reason I'm not long it is that I think that the metaverse is going to be important, but I think it's like so early here. I think we're like back to the year 2000 when we were talking the internet stocks, and everybody's like, you got a website, this is the future. And it was the future, but it really didn't come for a long time. It built and built and built, and now we're all on the internet 20 years later. But go back 20 years, 90% of people didn't even have email yet 25 years ago. So it's changed. I don't want to be too early on this and pay, a nosebleed valuation, or in the case of Unity, you can't value it as easy because, it doesn't have any earnings at all. So I love the stock. I do believe it's going to be there, but how do I say 97 is a safe place to buy it?
You can't. That's why I did the leaps. And if I look what would happen if I bought the stock at 130, trades down to 90, and then I've got your dilemma about Square. Do I protect my capital? You buy the leaps, you've committed that amount of money. I know I'm going to get the opportunity 10, 12 times between now and January of 2024 to reduce the cost down close to zero. So I don't have to worry about protecting the capital because I've committed that amount to the leap. But I do have a metaverse story for you.
Yeah. I love metaverse.
I bought an island on the metaverse 3 days ago.
Come on.
Yeah, wait. Tell us.
Can I go?
And then I got a tax bill from the state of Connecticut.
It's a joke.
Some of this metaverse stuff is really ludicrous.
Who's paying better question. Who owns this land that they're selling for $200 million in the metaverse? Because we hear about the person all the time. He was on CNBC that bought the land for $200 million. Who sold him that land? Because I want to be long that person. The person that's selling the $200 million land. Who sold that land?
The idea is, if you're a developer and you're the one that coded it, you're the one that if you built it, think of it like.
Well, we want to be long these developers that are selling $200 million virtual land because those guys are printing money. You talk about the Fed print money? Those guys are printing money.
I know. that's what bothers me about the metaverse, that this we had this, by the way, with The Sims. Remember The Sims? And
Oh yeah,
it's the
yeah.
same
I got
thing. It's just the same thing, except they've layered NFTs on top of Sims. There's
yeah.
nothing
I
new
mean,
in the world.
it's a similar idea, but yeah.
But
It's the same idea.
let's get
He's
serious.
right.
People need to protect capital here and know where to allocate and what to do. And I think with volatility the way it is, you shrink your trade size.
Yeah.
You don't chase, which I think is one of the smartest things I've heard this morning. And you buy the dips when there's blood in the street. And we had blood in the street when the retail traders were buying puts a week ago, Monday and Tuesday. First
yeah.
they puked out their stock, their longs, then they bought puts in record numbers. And that's when you step your toe in the water in stocks that have good solid fundamentals.
Mark, before we let you go, tell me why the utilities are holding up here. Isn't this contrary to the interest rate environment? I mean, are people just hanging out? I'm looking at the XLU. I mean, even, the TLT has come off. Substantially. What's going on with the are they just like the greatest short ever? Or is it just a safe play to keep your money?
It's a safe place to keep your money. I typically don't like the utilities as a safe haven. I'd rather go with either good pharmaceuticals or the beverage stocks, which have,
I'll drink to that.
yeah, indeed. Yeah, STZ and other really, by the way, the utilities aren't that strong. They're still down 5-6% from their highs. So they're not that much different than the
Oh, look at like
S&P.
DTE. I mean,
Yeah,
that's right. There's different ones. Okay.
there are one-off utilities that have done well. I have no idea why. They probably have natural gas in their backyard. But look at STZ if you want to see a stock that you buy on a dip. Again, don't chase.
All right, Marc Chaikin joins the show every Thursday. Marc, it's always a pleasure. Stay warm out there. We'll talk to you again next week.
Yeah, be well, guys.
I like Paul. People are not going to stop using electricity. I like that. That's a good
probably
comment.
not anytime in the near future.
But you know what? The whole thing with the metaverse, weren't we
But
all supposed
Bitcoin's going to be in trouble when we lose electricity. I'll tell you that much.
Oh, yeah. But kind of like the metaverse, weren't we all supposed to have driverless cars by now? No driving
It comes
cars?
a lot slower than what everybody would like. The technology revolution of a new and disruptive technology comes a lot slower than the market price is in. And this is what you are seeing painfully for the Kathy Wood stocks, because she's invested in all the disruptive technology at nosebleed valuations. And it's coming. And she's going to be right with these companies that are going to be very disruptive. But she simply paid too much money for them. That's where she's going to be wrong. I want to be in all her stocks. I want to be in those disruptive technologies, but I want to be in them at reasonable valuations. And we may get the shot here yet. Maybe Unity, we get it down there and it becomes more reasonable valuation. Maybe you should be buying Unity today. I've said on this show a couple of times, people, I like this play for the metaverse as well. But do I want to be long the metaverse right now? That is the question, and that's why I maybe don't own Unity. That's why I've maybe been selling some of my Ethereum. And I'm just scared that we are early on this trade, and the profits are a long ways away.
Let's move on to Spotify here.
Second stock of the day.
I do think Meta platforms
been lots of stocks.
I think Meta platforms is having an influence to some extent on this, because Spotify, and I'll tell you the numbers here as we see Joel's charts. Last quarter was actually a very good quarter for them. The numbers that they reported for their fourth quarter came in at the high end of their own prior guidance. It was good. The backward looking numbers were good. The forward looking numbers were not as good, and they were a little bit light, frankly. So the anxiety here, the price action here, would seem to be hinging on that fact that their MAU guidance and their DAU guidance did come in a little bit above estimates, and there's they admitted that there is an unknown here with regards to the potential financial impact of the Joe Rogan situation. But I think when you throw that within the context of the Facebook report, which was really bad, and there's just a general sense of anxiety out there with regards to any tech platform and any user growth at all, that's not helping Spotify here. But last quarter was a very good quarter for them. Let's be clear about that. The business is functioning, is frankly performing very well. It's just that their own forward-looking numbers left a little bit to be desired here. So
A couple comments here. First of all, technically, I'm just looking at the 150 area, that monthly low back in June.
We hit that after
143.
hours.
I know. I
That's
know.
crazy.
Well, that low was 143.01. I would have you would have had to round it off to 150, right? You had the pre-market low is actually 147.90, but that might have been the one, like, if you had, if you had any kind of the puts or anything and you wanted to go for some like 150, you might have been like upset when it went to 148. But when it bounced, that was during the conference call when they said that pre-market prep would remain on the platform. And then that's when it got the bounce up back over
That's it.
180.
That's
So,
it.
I don't know. You're gonna have a hard time getting back down here to 150 or under. At least that's in my opinion. I think you got to do a reset here. And if you're looking to get this on the cheap, I think the first thing you look for is the low of the move, 164.41. I
It
don't even know
doesn't
if you're
really
going to
make money.
get
I think it
that.
made a penny. It's tough to own
Yeah,
stocks that don't make money in this environment. Again, I don't know though. Like I'm very torn long term. The short term, obviously, it's been a lot of chop. You're buying dips, you're selling rips. If you're selling those rips the last couple of days, you're happy you did it. The long term, it's a tricky market. And, even with Marc on, he likes some of these companies. He's doing it via long-term leaps. I do it. I don't buy the long-term leaps. I don't like paying losing the time value of money. It goes out long enough, and obviously you're not losing as much time value in those early months. So if you go out long enough, it may be a decent way to play it as well. I just buy stocks. So, with Unity, I would just buy the stock. If you're underwater, you can always rate a covered call against it if you think you're going down. But then what ends up happening is you end up, it ends up going without you and you lose the stock.
one big
The
up
one
there.
reason why when you're buying these growthy names and you're turning around and selling calls and you're getting, those cost bases is down, is you're taking on a lot of the risk if the stock continues to move down and you're not getting as much of the upside if it has a rip-roaring rally just suddenly. So, it's a tricky way to play it. I've always just been under the impression you like the company, you buy it, but buying at a reasonable price. And I don't know how to value any of this stuff. Like, Spotify, Unity, even at least Square, I can say it's trading 50 times earnings. It's growing. Is it reasonable growth rate? It's, I don't know if it's reasonable or not, but, I've taken a shot on that one. I've got a portfolio that is shoved full of value. I need a little bit of growth. So again, it's got to be your own building your portfolio. What do you want it to look like? I like mine to look conservative. I like mine because I don't like making money and losing money. So, how does Square fit in that? Well, when you've got 90% value stocks, you need a little bit of growth in there. So you got to pick a few that you like. Well, I stick Unity in there. I think at some point in time, because I do believe it'll be a big part of the metaverse, but I think the metaverse is a long ways away from making a difference in our lives.
I, you know what's frustrating here also is like we can't control when if the market gets ahead of you, right? You can't control that. So like if you were bullish, like all of the ARC stocks and all of Cathy Wood stuff, and you bought it all in 2019, right? Because you were super bullish, or 2018 or whatever,
Uh-huh.
and then it got way ahead of you, right?
Yeah.
And you agree with everything she says. It's a 5-year, it's a 10-year story, and then it became a 1-year story, and that's not your fault. But you can't control that, and now you're paying the price for. You ended up in a way you may still be right, but you're paying the price for exuberance, right, ahead
Yeah.
of time, and it's not your fault. So it just makes things that's one of the things that makes this game really, really difficult. Is you can end up being right. This goes back to the telecom comment you made earlier. It's just sometimes things the market gets ahead of you, and that sucks.
It's a great point. That's what it did in 2020. It got ahead of everything. And there's going to be growth in all of these stocks that Cathy Wood owns. There's going to be growth in all of these names. I agree with the disruptive technology. I believe a lot of these names are going to be here in the long term. There's a lot of them that won't be, but there's a lot of them that will be. And she's taking, educated bets. But to come in and, doing, I don't know how she gets these numbers to say that they're all going to grow into these valuations, because some of them are just so extreme. It's like, I don't know how you're even doing that. So it's a different, she has a different investing philosophy than I do, which is why I obviously butt
yeah.
heads
You
with
make money.
Wow, I don't know on the long. Again, I've said this about myself. I think I'm a great trader. I think my P&L proves that, on a daily basis. I think as a long-term investor, I think I
Jury's
could do
always out.
better. And that's
Yeah.
why I'm here a lot of the times. I'm not making a hell of a lot of money on this show. It's like, I'm here because I learned from the chat. I learned from people like Marc Chaikin, who's coming on. I learned from a lot of people, and you're always got to be learning. And if I just became a hermit and, all of a sudden just went off Twitter and went off social media and stopped doing the show and just traded my own thing, eventually I'd become a dinosaur because you're not learning from other people. You've always got to be learning from other people. Even if you think they know more or you know more or whoever knows more, it doesn't matter. You can always learn something from somebody else. Even if they don't know as much as you might pick something up. And then you might spin it and make it your own. That's what I've always tried to do. So I think you've got to continue to be learning. You've got to continue to be, out there interacting with people. It's the way you learn how to do things, and it's the way you get different ideas. I mean, Mitch has been on, and he brought us Workhorse, and he brought us a lot of these great stocks, and a lot of these stocks went up 1,000%. They really went up, and they've come back down in valuations. It's a different type of market, but you got to realize what type of market you're in and then adjust for it. So the chat I've learned so much from it. I want to keep learning from it. And I need to learn a lot on the investing side of it because I trade my investing account too much. There's too much trader in me, and I look at that and think, even with the Square, I'm like, should I just cut out? I'm basically at even here now, but I was just up 20%. But I think long term, do I think Square is going away? Do I think I think there is still a long term story here, but maybe I'm wrong. So that's why I stay diversified. It's tricky. Investing is very hard.
And you know what I think, and you're making a great point there. And I think what different is like we try and learn not only from our own mistakes but from other people's mistakes. I mean, no one on Twitter like Dennis. You have losing trades. You really shouldn't be on Twitter. I mean,
You
you
shouldn't
admit.
talk about him on Twitter because
Yeah,
everybody's
I
he's an
mean, it's
idiot.
just like, and I almost was going to say that to you because you tweeted about
My
something.
Square I retweeted
Yeah,
yesterday.
yeah, and I'm
Bad
like,
call
Dennis,
by me.
Dennis, Dennis, you're gonna lose followers. And oh, I made 978, and that's all you see on there. But you never hear like, wow, I got smoked on this. It's like every trade, every person that tweets, and then they all retweet each other. Oh, I had that one too. But when the market's going down, you never hear anything. So
Nobody owned Facebook yesterday,
yeah, no
Joel.
one, no, it's like everyone's
Nobody owned
short
Facebook.
Facebook.
The
Everyone's
destruction of
short
wealth didn't
Facebook.
happen for anybody on Twitter. I'll tell you that
No
much.
way, no way.
Nobody
I
owned
bet you there's
that.
not one person on Twitter that admits go to Twitter and see put in Facebook and see if one person on there said, "Oh man, I'm just getting stuffed on this," or "I tried to buy it at 270," or "I tried to buy it at 260," or "I tried to buy it at 250." Wow, it might get to that 245 today. Look at us down 73.36,
It can go anywhere it wants. It could pull a
249.64.
PayPal and open at the highs and continue to tank, or it might just rebound. It's widely owned, it's widely loved. I tend to think it'll bounce a little bit, but I don't want to be the first one. I did buy Netflix, remember though, and actually that did work out. But I waited until, and people, I had the great question from my Twitter account last night. Somebody saying, well, if you're not catching falling knives and you're not chasing, when are you buying? And and that's such a fantastic question because it's a great point he's making. It's like, it sounds like you're not going to be buying at all. Well, when I bought Netflix, it gapped down in the earnings, did not buy the first day because I always let the dust settle rule. Karen Feinerman calls it a 3-day rule. I kind of have the same thing. Let it settle for a couple of days and let's see where it starts to stabilize. Well, we went down to 350 and then we bounced. And then we came back and we were trying to retest the 350. I was like, now I have a level that I can lean on. And I bought it 362, I think. The low that day was 356. And then the next day it went up a little bit. And then the Ackman thing happened and then the thing blasted off. But it's coming back in now, and now here's the trader in me saying maybe. So I timed the buy on my Netflix absolutely perfect. I timed the Square buy absolutely perfect. Again, buying on the retest. As trades, I would be long gone on those, but because I stuck them in the long-term investment portfolio, that's telling me, well, you got the perfect entry. Why, and you want this for the next 3 or 4 years. Why are you trading out of it? So, but the trader in me says, book that gain because it's going to go away. You're in this environment that goes away. So if it was a trading account, I would absolutely sell Netflix. I would have absolutely sold Square. But because I put in the long-term investing account, that struggle between investing and trading I struggle with that on a continuous basis, keeps me in it. So I time my entries very well usually. So again, when I'm buying, I'm not catching on the first day or the second day, waiting for stabilization and then buying on a retest and saying if it passes that test, then that's how I would set up my trades.
What's like I mean, and I know you don't want to do this because you're running a million different things in your head, but just to alluding what Mark was saying, and I have no idea. I don't have my options platform up, but what on the close yesterday? What do you think? Like the weekly, 4:30 call was going for some ridiculous amount. I mean, if you're holding this, I mean, is it going to keep running? Of course, you don't know what's going to happen with the Facebook, but I think that's what Mark. I mean, it's difficult, and you're right. And then
You
it
could
opens
you
up
could write a
50
call,
bucks.
bring down your cost basis. You can continue to write calls. The one
But
thing
when I had the
why, and
big
I
up
used to do
move,
this back in 2007, 2008. I
Walmart,
buy stocks,
Walmart,
write calls, buy stocks, write calls. What happened? Man, we're getting smacked around. But what happened to change my long-term call writing is that in 2009, I got
Walmart.
called away on all of my stocks. Like I wrote the Qs. I had bought a pile of Qs in the longer-term account at I think, oh my gosh, in
What's going on
2000.
here? Are we
Well,
get some
we
news?
dropped a little bit, Joel.
I mean,
We dropped 6 points. We're down 60, so we dropped a little bit. Let's go back to the conversation just because
Sorry.
I think this is important that we're talking. The long-term investing, and everybody wants to turn around, buy stock, rate calls, buy stocks, rate calls. But what happened to me in 2009 was I bought a pile of Qs. I think I bought my Qs at like $40, like 40, not 400, 40. And I wrote up like the 50 calls for like $2 or something. I was like, oh, I'm bringing 38. It'd be a great return. I got called away on all those Qs, and those Qs are now worth $359. And I kept a little bit of the Qs from that original position, and I still have it, and that's what built my long-term portfolio. So because I got called away on 2/3 of the position back then, and it may not have happened. So I got called away on eBay. I had bought it at 11. This was before the PayPal spinoff. So you have to add on the PayPal price too. I wrote 15. I got called away. Every 2009, I got called away on my entire portfolio. And then 2009, 10, 11, and we went for this huge bull run. And I got left behind on a lot of these stocks. And it was all because I was trying to bring in an extra 10%. And I missed hundreds of percents because of that. So it's a tricky environment because when you're writing calls, you're taking all the risk. When you're writing covered calls, you're taking all the risk of the downside, but not getting all of the upside. And that's why I wonder if those returns aren't skewed in the long run to make your investing portfolio not look as good. And it's just a question. It's not necessarily, I don't have any empirical data on this, but it happened to me. And that's why I don't write covered calls in my long-term portfolio anymore.
We'd be remiss not to at least acknowledge the effect that Facebook is having on other stocks here this morning. Pinterest and Snapchat and Twitter, but Pinterest and Snapchat in particular, because they report earnings tonight.
Holy
The bar
smokes.
is low. On the other hand, I really don't think it matters. I really think there's probably nothing that they can say that would turn the tide right now for either of them. Pinterest, Joe and I talked about this on the At the Close yesterday. They have their own issues. They've had a number of key executives leave in the last few months. If Facebook cited Apple's privacy policy last night, Snapchat has already cited that. Pinterest has already cited that. So they will probably just continue to blame that. And also, these are advertising-based businesses, and when you have a supply chain problem and you can't get product out, why would you advertise, right? So that's been cited as well previously. Facebook said that last night in their report. So I think the bar is low, and I think there's frankly no reason to look at Pinterest or Snapchat on the long side, despite the low bar. That's sort of my take heading into tonight.
Well, it's
Very good.
making new lows. I always say when a stock makes a new low, you have to go. You don't want to own stocks making new 52-week lows because new 52-week lows usually beget more 52-week lows. I will say the Snapchat bar, like you said, is incredibly low. Facebook, they're hitting Snapchat down 17% this morning, and Snapchat hasn't even said anything yet. So the bar is very low. If they can say anything okay, you could have a relief rally in it. Is there anything more than that? Probably not. I mean, you look at Snapchat and, they've never made money, have they? Have they ever been
Yes,
profitable?
they turned it.
Are they profitable,
Yeah,
Snapchat?
yes, Snapchat is profitable. They were before COVID. No, they were actually
No,
their
trailing basis is no peace. They must have lost money
no,
last
their
year.
their first quarter of profitability was actually the first Q4 2019 was they were profitable. They were profitable for the fiscal year 2020 and 21. They were profitable. So yeah, they make money.
They don't make a ton of money. I see a forward earnings of 71. And if Facebook's businesses are in decline, core businesses, Snapchat, who the hell uses Snapchat anymore? Just question to the chat. I mean, does a lot of people use Snapchat still?
I use it, but I gotta say, and maybe this is an indication, is I probably get a push notification from Snapchat, probably 4 to 5 times a week, maybe more, maybe 6 or 7 times a week, and like they are trying really, really hard to get me to open the app. Like they will send me notifications for like the most innocuous stuff. Oh, a new contact in your phone is on Snapchat. Oh, have you tried this feature? Oh, do this thing. They are trying so hard to
So
get me to
hard.
open the app.
Too hard.
And yeah, so maybe that's an indication of their user base and how active or non-active they are. Because I think technically I am a monthly active user. Well, I know I am, but I'm not that active. So I don't know.
The stock at the close of yesterday, and this market cap is going to be lower now because the stock is significantly down. But at the close of yesterday, was worth 54 billion. I think it's like 51. Yeah. So if we have the shares outstanding, 50 million shares. I'm just doing the quick 1.3 million shares. It's down another. How much is it down? Another $6, 9 billion. It's probably worth $45 billion still. This app that doesn't have the growth that it once upon a time did is still worth $45 billion. Wrap your head around how much money that is. Wrap your head about what companies that are actually producing stuff. $45 billion. I know we're throwing those numbers around, but we're not in this Kansas market anymore. It's free money everywhere, tightening Fed. I mean, 45 billion. It would be reasonable to think that Snapchat, if you just asked me what is that worth, I'd say like, a few $1 billion. $45 billion? It's worth $45 billion still? That makes me think it's going to $2. So, I mean, you can say it's cheap at 26, and I think it could bounce because it's just such a low bar. But to Spencer Israel's point, these businesses are under attack right now. The competition is intense, and the values of these things are insane. So it's traded 71 on a forward basis PE, but I mean, look even further than that. I'm not even sure they can hit those numbers. So no, it's a no touch for me. Sorry, not interested in Snapchat whatsoever.
Not interested.
Not in the long-term account. If it bounces, we'll trade anything, but no, not in the long-term account. I'm not shorting it into a report though that the bar is this low.
Let's do some ticker time. Bravo Mo 1992. I hope I got that right. Dropped us a $5, asked us to look at Estee Lauder and MSG Entertainment, which is MSGS. So let's start with EL here. I've not looked at these charts today. I don't know. I think EL had
reported, didn't it?
I think I was going to say, I think they reported. So let's look at EL's numbers real fast. This
Wow,
is
flat. That's crazy.
the EPS beat, the sales beat, the guidance. Q3 the EPS guidance was very light. The fiscal year EPS guidance was fine, but their EPS guidance for the current quarter was not so good.
Is it offered lower, Dennis? Was there any
No, it's
market?
bid flat there, but man, I don't like that guidance. But I don't know. People are looking, non-tech though, right? So right now they're hiding, and I mean, you come in a day like this, you expect every stock to be down. I can look at my up filter. There's a lot of stocks up today, and the reason is a lot of stock. They're all non-tech. Non-tech is getting bid. The banks are getting bid. Verizon's getting bid. I mean, Ralph Lauren is up significantly, and maybe there's news there. They have earnings. Ralph Lauren, it's up 10.
Yep.
So you can clearly see there. I mean, most stocks are down. Don't kid yourself. But you come in a day, you're down 60 handles in the S&P. You're like, oh, it's gonna be a bloodbath. Every stock's down. There's a lot of stocks that are up today. Some individual news, but Pepsi's up again. Some of your consumer staples are up again. Comcast is up. And that's your Qs components, which we've talked about yesterday. Exact opposite day to the Google, where you're going to see those non-tech components of the Qs actually show strength because the rotation out of the tech is so strong that they've got to buy the non-tech to keep the Qs, from just imploding. So I don't know. EL, as we just mentioned, it's just I don't like that report.
Yeah. notwithstanding the report, it had, a nice run with the market into the report. So I know the close was what, 1917. I'd say if this thing gets 320 bid, then when you get one big buyer in here, I mean, this thing there's nothing between 320 and 340. That's it. If it can clear the previous day's high and get bid above 320. If you're looking to buy it, like if they'd say, oh, that guidance is horrible, and you want to try and buy this on a pullback, you've had just about a 40-point move off the low from that last Monday's low. So that would bring you back into the $300 area if if you're looking like you want 302, 303, if you want to pick it up on the cheap.
All
But
right, let's go real quick here. Let's go MSGS, and then I see tickers flying, and we're going to cover a few more.
I mean, these are reopening
yeah.
trades.
Yeah.
I think we're going to get a reopening here. I'd rather be long this kind of stock. I still have my win. I'd rather be long these kind of stocks than tech right now. So I don't know if this reported or whatever, but
it did. But it's a reopening play. Bottom line,
I think, and again, it's hard to give a technical on something that just reported because it'll have a violent swing. Its liquidity is very low. It's traded 13 shares today. So it obviously hasn't priced in any of the earnings report yet. But, I do like the reopening stocks. They've been getting hammered. I think on pullbacks here, I'd actually be inclined to buy some of the reopening names. But I said that 3 weeks ago, and we continue to get hammered on everything. So it's a tough market right now.
all right.
I just look at the 2-day high. If you could get above the 2-day high here, maybe some room on the upside. That's 167. So actually, two highs. Keep an eye on 167.50 on the upside. If you want to try and buy it on the cheap, maybe closer to 160. 160.50 is your 2-day low. As we continue to
Well,
fall here in the S&P.
Christine Lagarde has been speaking now for the last 20 minutes. Maybe.
She's no Draghi.
All right. Penn National, they had reported this morning, and they announced a $750 million stock buyback. Whoopee!
It's a reopening stock. Again, I think I own Penn, bag holder in Penn in the long-term account. Wish I didn't have it. I sold half of it at a loss, and after the Portnoy debacle, bought it at the worst possible time. The Portnoy news happened 3 days after I put it in the long-term account, and it was a mistake. And I sold half of it at the loss, and I kept on to half of it. Mistake, should have sold it all at $62, and it's 45 here now. So bag holding this, I don't even know what to do on it in the long-term account. But I do think there's a reopening play. I think a lot of this stuff is overdone on the reopening stocks, but who knows? I mean, this is a market that stocks, rip, and then they get hit harder than
This
they
is
did
the
originally.
time. Oh, this is the great time. Oh, it's the NFL playoffs. Oh, is it the bet? Like, shouldn't these things just be ripping instead of offering $5,000?
Nothing. You're in a bad market environment here, though,
Right.
too. So, nothing has been ripping. I mean, I think that's why it is a stock picker's market right now. I do think if you're buying some reopening stocks, I do think you're going to be happy. But I mean, if the S&P start to take out the lows, do you want to own any stocks at all? So you can have the best stock in the world. It could actually outperform on a relative basis. And Penn probably has. I mean, if you look at where it started the year to where it is, I guess it's market basis, but it's definitely not been hit as hard as some of the other stocks. So I don't know, over the last month.
I'll just go with this one, inside day, from the previous day's range. So clears 47.5. I'd buy it on strength. It breaks down through 45, seller on weakness. And then you can see the actual low of the move was 41.37. But quiet inside day, let the market shake it out.
All right, let's get off that and go to T-Mobile here. They reported last night their earnings were good. EPS was extremely good. 34 cents is what they reported for the last quarter versus an 18-cent estimate. Their sales was much close. It was in line, but it was actually a smidgen on the light side. But bottom line, their earnings was a big beat. Maybe there's some weird accounting thing there, but that's a big number.
Big help that it's a non-tech component in the Qs. Don't disregard that fact that when they hammer Facebook and all of a sudden it's a non-tech component that actually T-Mobile, and again, it was good to report, but I mean, it was going to be up. If it didn't report, it would be up today. For the simple reason is that they hammered all the technology so much, and this is defensive within the Qs. So the rotation within the index helps it out, but it's a big report. It's a big pop, though, right into all these 120, 122.
There you go.
You're buying it now. You're doing it backwards. I say it all the time.
Got to get through 120. You got to, if you get through 120, see what happens at 122, and I'll leave it after that. I don't think we'll see 124. You've only leaked $2 off that high, so see what happens at 2 daily highs at 120 and then a couple more highs at 122. On the downside, where to buy this thing on a pullback? I'll leave that to the top of yesterday's range at 110.50.
All right. We usually have Peter Tuchman on at this time, but he just said he can't do it. He kind of canceled the last minute. So we're gonna wrap the show up. It's 9 o'clock. This is the time we normally end on any given day.
I'll
So
get all your tickers on our Premarket Prep Plus. We missed a ton of them. We can file the price action in Facebook right
What
up to
I
the
just
open
want to
as
say one
well.
thing too is respect those lows of the move. You're going to get some challenges today where they're actually not even 50% retracements. That stocks are actually imploded the whole thing. So the lows of the move, meaning from 4 or 5 days ago or 6 days ago when we made the lows, you got to respect those. And if you're not long enough growth, maybe you do want to take this dip opportunity to maybe position yourself a little bit more in growthy stuff. I don't think all the pain trade's over yet, but I do think that there is some opportunity here. And I think there's trading opportunities where you could see some bounces if stocks start approaching their lows from 4 or 5 days ago when we started ripping out of here. So just as much as we were overbought, and we rallied 20% on some of these names in 3 days. I mean,
look
we've
at
given
you
it all
trying
back.
to be bullish again.
This is how I work
I know,
as a
I know,
trader.
I
This is
know.
how you're supposed to be doing it. When it's ripping higher, you're
I know.
selling. When it's dipping lower, you're buying.
Yeah.
So, I mean, again, where everybody wanted me to buy stocks yesterday or the day before, and yeah, we continue to rip higher for an extra day on that. I'm like, no, it's not the way I'm doing it as a trader. So I'm setting up, potential bounces, and obviously, sometimes they take out the lows and then you got to say, okay, it didn't work out. But when you get a retest of a low, I mean, AMD, let's talk about this one here. So AMD, $100, huge level. That was the level of all levels. It had a wicked bounce out of there. People are ripping and buying it. This is a great report, 130. It's going back to all-time highs. Well, it's not. We're in a bad environment. So it's pulled back to 120. But again, you think AMD gets down to that one. I don't know if it's going to get back to 100 because, it is a good company and it is growing. Lisa Su does know what she's doing. And maybe you get AMD as a shot at 112 or 113 today. Maybe you take that shot. But I think on pullbacks here, I'm looking at the companies that were really ripping and, baby with the bathwater, Facebook's taking them all down. Maybe there is some opportunities to buy some of these other stocks. Square is getting hit because of PayPal so hard that, maybe that was a bad pick. But I mean, I look at a lot of these other names and there's some opportunities on this dip today. Don't kid yourself.
All right, Dennis. Have a great rest of your day. I hope you stay green, or not that you're not green now, but you know what I mean. I hope you just have a good day.
We're trying.
That's what I
hope you guys all have a good day too.
All right. Hey, this chart is from Benzinga Pro. I cannot recommend Benzinga Pro enough. If you are new here, you don't know what that is. It is our real-time news and research platform. It's got charts, as you can see. It's got calendars for earnings, for ratings. It's got SEC filings, press releases. It's got a tool for where you can find where stocks are halted, when they're making new highs or new lows, when they're gapping, when there's unusual options. It's got a movers tool to find the biggest movers. It's got a scanner tool. It's got a screener. You can look at fundamental information, go look at the financials, look at balance sheets, look at news. We've got a news feed. There's a ton. There's a squawk feature. There is a ton of good stuff. If you're not in Benzinga Pro, seriously, at the very least, check it out for a free 2-week trial. Pro.benzinga.com. The link is on the screen there. For real, it is worth every penny. I am not just saying that. I genuinely believe it. All right, we got to hop live. Trading with Benzinga is going live in a couple of minutes. Mitch, Zunaid, Ryan, everyone, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone have a great rest of your day. Go make some money and good luck at the open.